Today, we're going to talk about something that every property owner needs to understand, and that is home insurance. If you're a homeowner or an investor of a single family or multifamily, meaning duplex, triplex, fourplex, this conversation is for you. I'm Lina Monteverde, real estate strategist here in the greater Houston area. And today I have Steven Scump from Turnkey Insurance with me. Welcome, Steven.
Hey, how's it going, Lina?
Awesome. So happy to have you with me today.
I'm always happy to be here.
So, Steven, question number one, I think the most basic one. What is home insurance?
Yeah, so I'm really glad somebody asked that because nobody ever wants to know really what this is. Homeowners insurance basically is protecting the assets that you're purchasing. A lot of people can't afford to replace their entire home or do what is called self-insuring, so they reach out to companies to basically help mitigate the risk because as time goes on, storms always are a problem. And we protect against the what if. So I'm basically here to protect the things that you spend the most amount of money on.
And tell me something like, is there an insurance that just protects a few things versus like the entire house?
Yeah, so there's actually insurance for just about everything that you could possibly own. There's a few exceptions. And I'm not going to break those down because these are ones that are never really going to apply to people. But yeah, there's insurance that pretty much applies to just about anything you own. You're going to know about the homeowners insurance. That's the big one that all your lenders and your realtors are going to talk to you about because you have to have that in order to qualify on a loan and get a mortgage nowadays. There's flood insurance here in the state of Texas. Flood is always separated from the home.
And that's something I wanted to bring up because I remember back when Harvey hit, Hurricane Harvey, for those that doesn't know what Harvey is, in 2017, a lot of people thought that they were covered for the flood part of it. And then I think most people, that's when they realized like home insurance was one thing and then the flood insurance was a completely different thing and they were not covered.
And I had a lot of conversations coming out of Harvey specifically because once you start talking about the statistics of it, it got really ugly because, unless you're in a high risk flood zone, which is AE, which is considered like a flash flood zone, or you're in like a coastal flood zone, your lender is probably not going to mention it to you about getting flood. In fact, they're probably going to say, hey, you're not in a flood zone, which especially if you're located anywhere within Harris County, it's just not
true.
Thing with
real estate agents, they don't bring it up.
Nobody brings it up nowadays. And it's just because it's not required isn't something that you should overlook entirely because, and again, once you pull up the statistics about Harvey, it was about 70% of all the claims that were made during Harvey were from flood. And then it was about, I want to say it was about 65% of all the claims that came out of those flood specific claims were low to moderate risk flood zones where people were not required to buy flood insurance for their home. And unfortunately, I had a couple of weeks straight where I was taking phone calls every single day saying, hey guys, I'm sorry. I have you on a recorded line saying you didn't want the flood insurance. I know you have anywhere from 4 inches of water to, I had a couple of people calling where they had a few feet of water in their living room. And it's just
that had to be hard for you.
It was extremely difficult because I make the recommendation to get flood. Flood's gotten very cheap nowadays. I'm talking like flooded exists now where you can get it for sub $400 in a lot of these places. And I always make the push. I'm like, hey, look, you could budget.
That's $400
makes sense. That's $400 for the entire year. And I'm like, most people can budget this. I don't know anybody that can budget $100,000 claim randomly. So I always make a very strong push to do it now. A lot of people think I'd be pushy about it, but I'm like, look, trust me, because nowadays the idea on insurance is this has become another commodity where people are like, this is just getting too expensive. I can't believe this. A lot of people use the word scam because they've had like a bad experience or something like that. But when insurance works for you, I've never had somebody where it worked out for them and they were disappointed that they purchased the coverage.
Exactly. And can you have just insurance to cover like the entire loss of your property, like if it burns down or something?
Yeah. So one of the things that we are required to do in order to secure that loan is you have to write the home policy at replacement cost. What replacement cost essentially means is that they rebuild the entire building exactly the way it is. Brand new materials, brand new costs, basically as if it was a brand new home based on the parameters that are set within your policy. And that basically just means you're created whole. Nothing gets taken out of your claim. There's no depreciation or anything. And that's super important to have nowadays, especially when you start looking at some of these older homes or our more expensive homes, because at the end of the day, you know, if you're spending $400,000 to $500,000 on a home, you're going to want to make sure it gets rebuilt. You're going to want to make sure you get your home back in the event of something happening. So it is super important to make sure you have that replacement cost versus actual cash value on your home. And just to give the explanation, replacement cost basically, again, means it gets replaced as if it was brand new, full value, no depreciation, whereas actual cash value will factor the age of the home into the depreciation of your claim, which usually it's anywhere from 2 to 4% per year of depreciation, depending on which company you're working with.
Okay. And what is the process of submitting a claim?
So this one's super easy. As a broker, I am not a part of the claims process. A lot of people have the misconception of they need to call me when something has gone wrong. Now, I can always say, look, give me a call if you need to go.
I was going to say, I would 100% give you a call. I don't know anybody else. Why would I?
That's everybody's first reaction. I'm their first point of contact. I always tell them, I'm your guy to give a call if you have anything going on. I do not facilitate your claim. The only thing that I can do is point you in the right direction to get somebody to get that started for you. But who you're going to want to talk to get that process started is always going to be the claims department of the specific carrier you're working with. Most of these claim departments, to my knowledge, at least the companies that I work with, they're not doing a lot of heavy automated systems. You know, when things get super heavy during a hurricane, things might get a little bit slowed down. But for the most part, you call these call centers, they're going to pick up the phone, they're going to get everything started for you. They're going to get you in touch with your adjuster and basically get all the notes and everything started so that you can get that claims process moving forward for you.
Okay. And let's talk a little bit about the 3 main questions that your clients ask you. What would be question number 1? Like the top, the one that you're like, I just have this recording, I'll hit play.
So by far the most common question that I have, and this is for my investors and my single family homeowners, is, and it's not always the case, but I would say it's the case probably like 80 to 90% of the time, is the question is, hey, I'm buying this home for this amount. Why am I insuring it for less? And the answer is always the difference between what is market value of what you're purchasing the home versus replacement cost of what I'm insuring your home at. Every company uses something called a replacement cost estimator, which is the system that insurance uses to basically calculate labor involved, material cost, and inflation to essentially calculate how much it's going to take to rebuild your home with that inflation and material cost factored into it.
That makes sense, yeah.
And oftentimes people, you know, depending on the area that you live in, you can see that replacement cost being anywhere from maybe $50,000 in difference all the way up to $400,000 or $500,000 in difference. And the reason for that is it's not my responsibility to cover the slab that the house is built on. So that foundation that got laid that you spent $50,000 to $60,000 putting down, I don't cover that. I also don't cover the plot of land that the house is put on. Because at the end of the day, no matter what happens to your house, whether it burns to the ground, a tornado knocks it over, you got wind and hail damage, anything that happens to this property, both of those items are still going to be there. Now, a lot of companies will try and insure you.
What if there's a landslide and then there's no land?
Well, look, if we're dealing with a landslide here in Houston, I think we're going to have bigger fish to fry than our homeowners insurance at that point. But there are
that land is moved.
In places where landslides are more common, the insurance does exist to cover those items and whatnot. Now, I can tell you here in the Houston area and most of Texas, that's not going to be the case because, again, we're very dry. We're not dealing with landslides or mudslides or anything like that. And I can't speak for other states and other stuff because I'm not licensed outside of Texas at the moment. So I will just try and kind of keep the conversation to things that really kind of
apply to Texas, to Houston.
And I've never dealt with that situation in my 8 years of doing insurance, so I don't think that'll be a super common one.
Sorry for getting you off track. I just when you said like the land will still be there, I'm like, well, not necessarily, but it's true. It doesn't apply to us.
But there's also like there's similar questions like that. You know, people wonder like, does earthquake coverage affect me? Is that a thing here in Texas? It is. So you know, I'm glad you brought that up. We can talk more about that if you want. But to answer the question, the way I look at it is I don't see a reason to insure somebody's property for an amount that they're just never going to get access to. Because if somebody comes out and they're like, yeah, we'll rebuild your entire house for $400,000. and they've insured themselves at $700,000. You've essentially been paying for $300,000 in coverage that you're just never going to use. And insurance is already too expensive as it is. So I'm always just encouraged to make sure I'm as close to your replacement cost estimator as possible, because I want to
Makes
save you
sense.
money.
Okay, makes sense. So what would be question number 2?
Question number 2, I think the other most common one is definitely going to be how water damage versus flood damage. So in the state of Texas, flood is always separate from the homeowner's insurance. As in, if you do not buy a flood policy, you are not covered for flood insurance, or you're not covered for flood damage in any form or fashion. And the difference between water damage and flood damage is black and white. There is no argument. There's no subjugation. You can hire as many lawyers as you want to. There's no wiggle room here.
And what is the difference?
So water damage inside your house is going to come from your pipes or any of the infrastructure involved with your house and how it's built, i.e. the pipes that are running through the house, whether it's the sewage line, the main water line, anything like that. If you have a burst pipe that just spews through the water, or spews all the water through the kitchen or something like that, that'll be covered for you. That's considered your sudden and accidental clause. A lot of companies will do that up to the dwelling limit. Some companies do it limited. Some companies do it limited based on the age of the home. And that's going to be something that you need to just be aware of on your homeowner's policy on how that water works for you, because with how old homes are getting, some insurance companies will just cap you at a specific amount. A lot of the times just $10,000 in coverage.
$10,000?
Right?
That's not necessarily a good thing. Because
not
if
a
you
lot.
have any issue like in the top floor, let's say if it's a 2-story and it affects a big area.
It leaks down all the way. Yeah. And again, that limited water coverage only comes into play with a select few carriers. It also only comes into play when the house is over a certain age.
And let's create a different scenario. Let's say that there's a storm, so it's raining outside and a tree falls on your house and, obviously messes up the roof and a piece of the wall, and then water from the rain starts coming in. What is that considered? Which one covers that?
So in that situation, that's actually going to be all tied under your wind and hail coverage deductible. So that's not actually going to be considered water, because again, we circle back to, it did not come from your infrastructure. It came from the water outside the house. In that situation, that's not flood, that's not water damage, that's wind and hail damage.
And that is covered in your regular home policy?
That'll be covered under your homeowner's policy just normally.
Okay. Question number 3 then.
So question number 3, you brought this one up specifically about the aggressive breeds when we were talking about going over how this works. So aggressive breeds, a lot of companies have kind of relaxed on this rule, but there are a few companies out there that will, they will just cancel your insurance over having a specific type of dog breed. I'm not going to sit here and list all the companies just because I don't want to list one of the wrong ones.
No, there's no room for that.
This is specific underwriting type of thing that you just catch with certain companies. But I can tell you my high-risk people are going to be people that own German Shepherds, Huskies, any kind of pit bull mix, bulldog mix, and Rottweilers. Those are all considered aggressive breeds, and I understand where people, where owners of these types of dogs can sit here and say, hey, well, he's not this, that, and the other, and I've never had this issue.
He's friendly, nothing has happened before.
Yeah, and unfortunately, the nothing has happened before is not an excuse for that insurance companies accept. Statistically speaking, the numbers are against them in this situation, and companies just don't want to take on that liability. And it is strictly due to the lawsuits involved with these types of dog breeds.
Tell me something. How does that affect your home policy?
So it's going to be an all or nothing type situation. The company's either going to be a company that's willing to overlook the type of dog breed that you have and just wants to be notified that it is there, and it won't cause you any kind of issues on pricing. And they're just going to require you to be notified that your liability insurance will not cover anything that is a result of a dog bite or your dog causing any damage to somebody else, like bodily harm to somebody else. And then you got a lot of companies that won't even look in your direction because you said you had a German Shepherd. It's black and white. You're not going to have a price increase or decrease because of the type of dog you have. They're either going to accept you and provide you coverage, or they're just going to tell you up front, no, we're not going to do this.
And does this apply only to homeowners, only to investment properties, or
this applies to everything? So my investor carriers do ask the question of, are there going to be dogs on the property about tenants? And are they going to be any of the aggressive breeds? If you have a tenant that's coming in with an aggressive breed, yeah, it might be an issue with the insurance. But most landlord policies in that case, I will let you know that they already exclude animals as it is, as in if somebody comes onto your property, your dog bites them, and they try and sue you over that, your insurance is not going to cover that anywhere. Nobody's going to cover that. So that's going to be more of a question for the landlord to the tenant to have of, hey, whether or not they have this, because once the initial inspection is done by insurance, they're not going to come back 9 months later and say, hey, we heard you had a dog. We got to do something about this. But if 9 months later somebody gets bit by the dog and then you try and call your insurance, that might cause some issues for you. They may issue out a cancellation within 30 days. They're going to tell you, no, that's not going to be something that's covered under your liability insurance. And it's just a big hassle. This is one of those things where, again, the landlord needs to have the conversation with the tenant, and this has got to be a rule that maybe the landlord sets, like, hey, we're not going to accept certain types of dog breeds, and it's going to be more their responsibility than it will be the insurance companies to handle that.
Yeah, no, 100%. Okay, so let's talk now that we moved a little bit to the investor side, single family versus a multifamily.
So single family versus our multifamily. When I say multifamily, I'm going to rope everybody together. Our duplexes, triplexes, fourplexes. There is a lot of difference between how these work and how you want to cohabitate with it, or whether or not you want to do that. I can also preface this: anything over a 4-unit property does move into the commercial realm, as in it basically would be insured as if it was a
commercial
like
property.
as like an apartment, basically.
Yeah.
Where it's got multiple units, and then that doesn't change even if you get up to like 200 units in that one property. And I think that's a different conversation. I think we're talking to different people. But one of the common misconceptions about insurance in regards to like a fourplex versus a single family home, the price of your insurance is not going to be affected by the number of units you have in there. The price of the insurance is almost always involved with the value of the home, the materials used to build it, and the liability surrounding the area and the risk factor and factored into it. So don't think that just
that surprises me. I thought that maybe the amount of units had to do with the price, but then now I understand why they usually will ask you for the zip code.
Yeah.
So based on the location, then that's what's going to affect the price. Okay.
This is also something that I tell people is like, look, your insurance at one property is going to be completely different than another property next to you. You guys can be neighbors, have a very similar build and everything, and your insurance can be significantly more expensive or cheaper than what they're dealing with, because not only does everything change address to address, but the individual who owns the property can have vastly different insurance scores than that. Credit is factored into insurance pricing now. You have your insurance score, so if you're making a whole bunch of bogus claims or something like that, that's going to affect you. If you have a very, very large claim history, that's also going to cause your prices to go up on there too. So anytime I have people that are like, well, this property versus this one, I had different pricing. I'm like, well, you're comparing apples to oranges. It's very different. But just to kind of give you the short answer, typically multifamily units, do require a little bit more material costs. Sometimes they're a little bit more expensive, but the number of units in your property are not going to just directly correlate to a more expensive property. There's way more into it that goes with that. One of the more common questions when it comes to the investment ones is, hey, I'm going to be living in one of the units and renting out the other 3. Insurance does change for you there.
So everybody that's a house hacker, pay attention right now.
There's a lot of companies that do exactly that. They're going to allow you to live in one unit and rent out the other ones. That's just going to be something where you need to notify your insurance agent, broker, whoever you're working with, because they need to know how you plan on habitating that property. If it's going to be owner occupied with the other units rented out, then you probably need a homeowners policy that protects you properly for the stuff that you own that you plan on putting in your unit, and then you have an endorsement that basically allows you to rent out the other units.
So is it 2 different policies, or
no? It would all be roped into one policy. You're still going to get it all in one policy. You just need to make sure you're giving all the information to your broker, because what will happen is, let's say you say, I'm renting out all 4 units, and then the inspector comes out and finds that you're actually living in one of the units, or any kind of information gets back to the insurance company that you're actually living in one of the units, you're liable to have any of your claims denied and have your policy canceled. So Yeah, when it comes to insurance, just be honest with whoever you're talking to get the policy set up. Because at the end of the day, if you're lying to me, I'm lying to the carrier, and if any kind of lies get found out, I can get in trouble. You can get actually, I don't get in trouble if you lied to me. But you can get in trouble. You can have any of your claims denied. You basically are just rolling without coverage, that kind of stuff. So, but when it comes to those cohabitated types of policies, yeah, you need to be specific about it because you're technically going to be on a homeowner's policy, not like a landlord or what is called a dwelling fire policy. Whereas if you're not living there, you'll be on that investment style property for a landlord policy, that dwelling fire policy.
And Steven, you mentioned like an insurance score. What is that about?
So yeah, insurance score nowadays, this has been something that I think came out in the last probably 15 years or so. It works like credit. It's pretty much your insurance credit. If you come in and you don't pay your insurance bills regularly on time, you have a bunch of cancellations under your name. Like I said, you have a bunch of unpaid out claims, as in you're making claims on stuff that never meets your deductibles over and over again. Or if you're a high risk candidate, because your auto insurance does get affected by this. If you're constantly getting into wrecks in your cars and everything, and you're trying to get a decent homeowner's policy, they're going to look at this and be like, this person is making a lot of claims. We need to factor that in there because they're likely going to make a claim with us.
Okay.
That's going to cause your pricing to go up.
Interesting. I didn't know that you guys took all that into account.
Yeah, it's now don't think of this as like a direct credit hit. I'm not peeking into your financial history or anything like that, but they do a small credit pool for any kind of homeowners insurance nowadays and on your auto insurance to basically collect that information and factor you accordingly.
Okay, I think my next question would be, does the policy get affected by if you're renting a property long-term or short-term? So meaning, for a year or Airbnb type, or if you're renting by room.
Yes. So Airbnb versus long-term, that is a super important question. Again, you need to disclose that information. That's been becoming super important nowadays. There's a lot of companies that don't want to cover short-term rentals anymore. That will cover year-long leases or something like that, or basically 30 days or less. Now, 30-day leases for those are unaffected, but those also aren't super common. Most of our short-term Airbnbs are going to be 1 or 2 days a weekend, maybe 5 days max or something like that. You need to be very upfront with how you plan on doing that because insurance is very different for our short-term rentals. I'm also upfront about this. Short-term rentals are going to be significantly more expensive than our long-term rentals. And that's just because you're constantly rotating people in there. They cannot get a risk factor on a new tenant that's in there every other day. There's also just more liability increase. The more tenants that you have rotating through there, the higher likelihood that you're going to have damage to the property or have somebody get hurt on there and try and sue you. So just out the gate, short-term rentals are going to be significantly more expensive than just a normal year-long leased landlord property. Home sharing, where you're just renting out into individual doors. I'll say we're renting out a door or just a room inside a single property has become super prevalent nowadays. That is also going to be more expensive than just a normal landlord policy because home sharing brings in a whole different type of liability issues for a lot of companies. But essentially, it's another thing you need to disclose to your agent because the liability and how all of that works. I'm so sorry. I got to pause this. My cat is just being ridiculous.
No worries.
They didn't get. I woke up late and haven't been fed yet, so they've literally just.
Oh, so it's your fault. You see how you are.
I don't know if you heard all the stuff that's getting knocked down off of like the counters and everything in the background. Okay. All right. Where were we?
Short term, the bedroom one.
So home sharing. Home sharing has become a new one. There's not a large amount of companies out there right now that are insuring that one, but there are companies that exist that will cover that specific type of situation for you. This one's been brand new. I think literally in the last 9 months, I've had one person try and do this one. And so I will be honest, I'm kind of learning with this one, especially with like the Galveston market and how that's changed everything. This one will become more prevalent because as people move in and gain word of how this stuff works in Harris County, it will become a thing. But
I
it's
see it in with the duplexes because a lot of them are, South Houston, they're by the medical center. So I do know that our nurses that just work in the area for a period of time. And some of
yeah,
them, that's what they tend to do. They just rent a room instead of
yep.
renting an entire unit.
And oftentimes people will do this. I'm just going to use the example. I had somebody do it for a fourplex. Within this fourplex, there were 10 total rooms in all of essentially spread out between all 4 units. And he
Okay.
rented by door. So instead of having, maybe 4 units or instead of having 4
4
tenants,
tenants, they
you
had
have
10.
10 tenants in a house that's basically meant
That just sounds
for.
like a lot of work.
It's a lot of work for the landlord, but insurance factors that into it too. They're going to be like, okay, well, if you got 10 tenants here, your liability is going to be significantly more. So home sharing style properties, while they are feasible and doable, the insurance is going to be more expensive on there than an Airbnb style. It'll probably be a bit of a sticker shock for some people
And can you give me
because
a number or a percentage, whatever works better for you?
are you talking about like premium wise?
Yeah, like let's say, so how much it would be for home insurance for a year if it's rented long-term versus short-term versus by room?
That's always a really tough one because without running numbers and having property information and client information, I'm basically just throwing numbers out here. But let's say we're looking at like let's say we're looking at a 3,000 square foot landlord style fourplex or something like that.
Okay.
If I had to really just take a guess, if let's say we're just doing long-term rentals and all 4 of them, everybody's filled, the landlord is not living on the property. I mean, you could be, depending on the area, depending on the houses make it up, you could be looking at anything from probably $3,000 to $5,000. Once you get into that home sharing area, I can almost guarantee you're going to be looking at $7,000 or more.
Okay.
Now, single family homes, that's different. The pricing on there can range pretty greatly depending on all the information involved. So I'm not going to sit here and try and speak on that because I would need something to kind of work with an example on there.
Yeah.
But short-term rentals and long-term rentals are usually going to be kind of in the same realm as the homeowners insurance. Like, let's say we do a single family home long-term rental versus a single family home owner occupied. Sometimes landlord's insurance is actually cheaper than
Why
the
is that?
actual home. To be honest, it's just a numbers thing. It comes down to the fact that carriers take it differently. I have different options. So some people might take it cheaper than what the homeowners would. There's just so many numbers that get involved with it. But typically, homeowners insurance on a single family home versus a landlord policy on a single family home, they're usually always going to be within a couple $100s of each other.
Okay, yeah. Perfect. And anything else do you want to cover that has to do with investors?
With investors specifically,
Because I have is a general question, and it has to do with the roof.
go ahead and ask the question because roofs have become super common recently too.
What is up with insurance companies saying that they won't insure your home if the roof is over 15 years old?
So,
because a roof can last longer than that. So why are they cutting it off at 15? And why is this suddenly such a big deal?
Roofs nowadays that are getting built last longer than that. Okay, but the roofs that we're talking about where they're 15 years old, these roofs got put on 15 years ago. The material costs, their quality and everything are different than what we're using nowadays. And you can talk to any roofer, they'll tell you the same thing. But roofs that were put on 10, 15, 20 years ago, they were never going to last 20, 30 years here in Houston. That was never going to happen. They told you that, but the how prevalent hurricanes and everything are here, you might be lucky to get 15 years out of a 30-year roof. Maybe. Likely going to be 10 years. I'm very sure about that when it comes to the stats and everything behind how roof replacements work. Now, again, I'm not speaking on new roofs that have come out in like the last 5 years or so. I'm talking specifically roofs that are as old as that, what we're talking
15,
about, the 15, 20 years.
25 years ago. Okay.
The cutoff is 10 years from when they go from replacement costs on the roof to actual cash value. The vast majority of companies are going to force you to go to actual cash value, where they're going to factor in the depreciation based on the age of the roof. There are companies out there that will still recover it at replacement costs up to 15 years, but you're going to pay for it. Once you get to 15 years of age on that roof, there's not going to be a single company that's going to cover that roof at replacement cost because now the insurance company is going to replace that at a significant loss. Because if they come in and do a 15-year roof and that roof is just literally.
Who lost you? Oh, hey, I was calling you. I'm like, I lost you.
Oh, hold on. Okay, there we go. I'm sorry. I got a call in the middle of the thing, so it just shut off all my stuff.
Okay.
So yeah, the roof situation. There's not going to be any companies that cover your roof at 15 years or more at replacement cost. They're all going to do actual cash value because it just becomes such a detriment in regards to like the essentially the bottom line for the carrier there. They're basically giving you a 25-year roof on something that you probably haven't maintained at all. And if there had been basic maintenance on it, yeah, maybe that roof may have made it to 20 years, but the likelihood of that happening is a no. But yeah, once you're over 15 years of age, you're going to get forced into that actual cash value. There are going to be companies that will still insure your roof. I have companies that will insure a 20-year roof. Once you're over 20 years, though, you're going to be real hard pressed to find anybody that's going to cover that roof at all. They're often either going to force a roof exclusion or they're going to say, hey, you need to replace this roof in order to get coverage. And unfortunately, that's just the trend.
Yeah, it is the trend, and it gets interesting when you're selling a house.
Yeah.
Because then sometimes they won't want to insure it, and then the buyer and seller have to have a conversation in order to replace the roof before closing.
Yep, and then it becomes an argument between the seller wanting to pay for it or whether or not they can make a claim on it before they do it. It becomes a whole mess, and unfortunately, it puts a lot of people in a bind, and it causes home transactions sometimes to fall through. But again, if you're talking to somebody that has a 15, 20-year roof, you're basically pushing that responsibility onto the buyer. The buyer is very much going to have to replace that roof within the next couple of years, whether it's through a claim or it's through their own volition. That roof will need to be replaced within a couple of years. That's going to be expense that they're looking at.
Yeah.
So in that situation, when it comes to the seller arguing about it, I think it's part of the value of the home. I think it's something that needs to be talked about. Now, in regards to why it's been such a hard push from insurance companies, it's because the state has allowed it. This was a trend that started in Florida back in, I think it was 2021 is when they passed this through their legislator that insurance companies were basically allowed to drop you as a whole if your roof was over 10 years. Texas did a very similar thing where that insurance companies can't just necessarily drop you because of it, but they can change your coverages at the renewal to that actual cash value that we're talking about. They could raise your pricing on it. And I'm not exactly sure what the idea was. They did it under the guise that roofers were going to bring their pricing down because a lot of people don't know this. Roofing is an unregulated industry here in Texas. They're not required to do any kind of licensing or certificates or anything on the roofs that they install. There's nothing regulating the type of roof or how they install it. It also doesn't, they're not regulated on how their pricing and everything works. And the only way that they can wrangle that in is through basically the insurance companies being like, hey, you guys need to figure this out. And that's a really, really, really rough, ignorant stance on it because I didn't do a lot of research on it. I basically like spark notes on why that was an issue. But essentially the Texas legislator was the reason that insurance companies are allowing this to happen to our people.
Oh, well.
Yeah.
Can't do anything against that one for now, at least. Okay, let me see. I have one more question here. As a landlord, what type of insurance should I require my tenants to have?
So as a landlord, the physical property is always going to be your responsibility under your homeowner's insurance. Now, obviously, there's going to be wiggle room if the tenant comes in and causes damages and whatnot. There's going to be arguments about how you could sue them and whatnot. But the physical damage to your building will always be covered under your homeowner's policy. Everything else would be technically covered under the tenant's policy. So if somebody comes in, tries to sue you, they're going to try and sue the landlord, but the tenant should also be covered for that liability situation. It's almost
Why?
never.
Why should they also be covered?
Let's say the tenant is connected to the person that got hurt on the property in any form or fashion. That person's probably going to try and turn around and sue the landlord and sue the tenant. If the tenant doesn't have coverage there, they're going to have to eat that entire lawsuit. They're going to have to pay for it themselves. But But you also got to be upfront with how renters insurance works. Renters only covers you for liability, which is like that lawsuit situation, the medical payments, which kind of ties into the lawsuit coverage, and then their personal property. Landlords don't pay for your tenant's personal property. Put that stuff at zero or the lowest you can go and cover yourself for any appliances you put in there. But the tenant should always be protecting their own items under their insurance.
And then the tenant also needs flood insurance, correct?
Flood insurance, yes. You as a tenant, you can buy your own personal property flood insurance policy.
Exactly.
Those are dirt cheap. I'm also going to encourage the landlord, have your own flood policy, because again, the building is your responsibility. So if you get a flood, just because your tenant has flood insurance does not mean you have flood coverage.
Yeah, because that's just for their
flood insurance.
personal things. It's not going to be for the property.
Exactly.
Okay. Do you think we did well so far? Is there anything that we left out?
I think we did a pretty good job. Trying to think of, I mean, I think we can talk about the deductibles a little bit.
Okay.
People oftentimes get pretty shocked by the deductibles because here in Texas, Harris County specifically, all our deductibles are done in percentages. And the only one that you're going to be able to get on a non-percentage deductible is going to be your all perils deductible. Wind and hail, Harris County, anywhere here, minimum, you're going to have a 2% deductible. Anybody that's doing a 1% deductible, they're going to charge you for it. You're going to pay for it. Okay. But unfortunately, those percentages come directly out of the dwelling A coverage, which is the replacement cost. Those deductibles can get pretty high. So keep a lookout for that because, standard here is 1%, 2%. But if you've got a $600,000 house, that's a $12,000 wind and hail deductible. So something to keep a lookout for there. Also, deductibles are your quickest and easiest way to get your premium down. So if you're the type of landlord, and I ask these questions with my investment properties, I'm like, hey man, are you the type of landlord that's going to be making any claims on this property? You think are you going to have your own general contractor to repair your own stuff, pay it out of pocket, do all that? Oftentimes the question is yes. I'm like, hey man, if that's the case, there's no reason I should be charging this much for insurance. Let's raise these deductibles up because if you're not going to touch the policy anyways for $5,000 in damage, you're probably not going to touch the deductible anyways at $15,000 in damage. So let's save you some money on that premium. The deductibles is the easiest way to get the premium down for you, especially for my high DTI type clients. We're going to look at that deductible, get you through the door, and then if you want to change it later, you always can.
Yeah, so you really just have it as anything major happens.
Yeah, I call it a catastrophic policy or a get us through the door policy. And I'm always very upfront. I'm like, hey, you're probably not going to touch this unless something crazy happens. But this will get us in the house. This will get you there.
Okay. Thank you so much, Steven. I think we've covered everything we needed to cover.
Yeah, of course. And if you ever come up with other questions, I imagine you're going to drop my contact below for everything. I'll send that over to you.
I was just gonna say that you haven't let me finish my whole speech.
I get a little ahead of it, but yeah, I always open this up. If you guys will have my contact information wherever Lina decides to post it, you can always reach out to me, whether you want to look at your personal stuff or if you got a landlord policy or if you just have questions. This industry is convoluted. I'm here to bridge that gap for you guys. So yeah, give me a call, email me, text me. I'm here for you.
Thank you so much, Steven. And for all of you guys watching, thank you so much for joining. Again, Lina Monteverde, real estate agent. If you have any real estate question or any real estate needs, my contact is below. If you have any insurance questions or if you want to quote, you have Steven's information below. Feel free to reach out and follow us on all social media. You'll have a wonderful day.